All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for August 4th, 2025. We are recording this at our new 4 p.m. Eastern time, and this is episode number 488. So my name is David Cosmeter. I'm the creator of TimingResearch.com, and you should be seeing my charts right now, but we'll probably switch off and look at the charts of our panel too a bit during the episode. So today I've arranged for Erik Gebhard and Alaina Nicole to be our panel for today, and the option professor is back to moderate, so I'm going to turn it over to him.
Okay. Thank you, David, and good to be with Elena and Eric today. Got a lot to talk about, guys, because in the last 48 hours, we've seen a lot of up and down action. So it'll be very good to hear what you guys have got to say on all this stuff. Let's start out with the S&P 500. Elena, what are you thinking on what we're doing lately with the big down move Friday, big up move today?
Yeah, so I figured we would try to go for that gap today. We left a huge gap down. I believe it was from Thursday to Friday. And so we got our fill. But I think honestly, it's a new quarter, so I was expecting a little rebalancing, things like that. And I'm just really kind of waiting to see. I know we have like the trade talks coming up with China, and I definitely think that is going to give us some more clarity on our trajectory here.
Yeah, we've got a lot of stuff coming up. I guess the 7th, we start the tariffs. Then I think the 8th is when Russia is supposed to do something with a ceasefire, and then the 12th, China is supposed to do something with that. So there's something going on every day here.
Yeah.
Um, Eric, what are you thinking here? Is this just a fill the gap kind of deal, or is it pretty much a low from Friday that could last for a while?
Yeah, well, that's always the million-dollar question, right?
Yeah, yeah, yeah.
I guess part of the answer would be telling you what we actually did, at least what we recommended on Friday, and that was we bought the Nasdaq and the Russell. So, that's working out at the moment, but we think there's more to go. On the SPX, 6,300 is a level with, we closed well above that. So that's sort of I guess looking at options flow, that's a number where there's a lot of uh, let's just say it's the market's sort of pinned, or it's getting pinned at that level with a lot
Right.
of the options flow. So staying above that level is important, and you get into all this stuff about dealer gamma and so forth. But essentially, you're in an environment where you have uh, the positioning is favorable right now for the moment for, I think, more bullish legs here.
Hmm. Now, with regards to the areas where are you looking at like open interest being quite large at a certain strike price or something like that, or?
Yeah, we have some visibility into some of these, I guess you could say, wonky options data, and they're just looking at the influence on various strikes and where the volume and activity is and what that means for dealer positioning. So, if volatility becomes suppressed and you get a positive gamma or negative gamma
Mhm.
environment, and you get positions where the as volatility expands, then dealers are forced to basically chase rallies and chase sell-offs as well, and that exacerbates, the volatility, and that's kind of a nasty setup. But we're sort of in a position where it's more tradable, and you have volatility under control, for lack of a better phrase, at the moment.
Mhm.
So in a favorable investable bucket, I would say.
The I guess it's zero to expiration options. The volume and open interest on that is just tremendous, isn't it? Unlike SPX.
Oh, it's like taking over. It's in fact, a lot of, I would argue, and I'll stop talking here for a second, but I would argue, and a lot of the data that we follow is making this point, and that's kind of where I'm getting it from, which is, you know, half of the market right now is flow, money, order flow, and
Right.
a lot of it related to options, because you have the options flows, and that impacts what hedging has to take place in futures or ETFs or indexes or what have you. And then you have, uh, sort of this environment where I don't know what's leading. Is it the chicken and the egg kind of thing? Like, are the options flows now driving prices more than fundamentals? And there's kind of an argument to be made. But on the other hand, what, only 10 stocks or so are really the market right now anyway. So
Yeah. Yeah, that's where the action is.
yeah.
Alaina, I know you do a lot of with the day trading and keep it on a pretty short leash.
Mhm.
Did you enjoy the down move on Friday and then the reversal today, or was
Oh,
it easy? Was it
absolutely.
easy to catch a couple of rides, or what do you think?
Yeah, absolutely. Like I'm definitely more of like a headline momentum trader. So anytime that there's like a big shift in sentiment or like anything emotional, I'm there for it. So yeah, we had a great time. And like you said earlier, we reclaimed 6,300, which is really to be expected. Like I feel like with the S&P especially, it respects those levels. And so yeah, today was beautiful.
Yeah, and it seemed like there was ample time in the last couple of days to get involved in the up and the down of it all.
Hmm.
You know what I mean? Because you had a pretty good you had pretty good time on Friday. Where it deteriorated for a while, and then it kind of they have breaking news here. Palantir just topped $1 billion in revenue for the first time.
Wow.
Let's see how that stock seems to be doing because that's kind of big news, isn't it? PLTR. Or is it buy the rumor, sell the fact? We're going to find out, aren't we? It looks like it was buy the rumor and buy some more of it.
Pretty news.
Because it's up in the was it
Yeah.
167 now? So it's
Up
up a little bit.
up a little post market already.
Yeah.
Buy high and then buy higher.
Yeah. That's what that George Soros was famous for. Is if something goes up, you just keep buying more and kind of pyramid yourself. And I guess if if the thing doesn't stop, that's a really good way of progressively gambling, I guess. But yeah, they're definitely pumping it up. $14 higher than the close, so that's pretty good jump. Well, getting back to the short-term trading, Alaina,
Mhm.
like I say, did you see something today, like when you first walked in, that gave you a little opportunity, or
Oh,
had you?
yeah. So
Yeah,
this
because
morning,
overnight a lot happened, right?
for sure, for sure. So, like I said, at the beginning of the quarter, I like to kind of chill out a little bit. But once we took out Friday's high and got in that gap, that was kind of like our go sign. And then, like I said, we came up and filled it. And I believe like maybe on the 30, we came up around the 200. And that's like, I always use the moving averages as like support and resistance and take profit levels. And so it right in there, it's like, once we cross the 50 and get between that 200, I like to kind of cool it for a minute to make sure we can sustain. If we're going to push, that's cool. But if we're going to get stuck there or, hit our head in reverse, I definitely don't want to be involved in that. So this afternoon, I was already out of the market by then. But yeah, this morning, the push out of the open was beautiful.
Yeah, the Palantir news looks like it's probably going to help the S&P because that kind of revenue number is what people want to see. The money
Yeah.
coming in, right? And they already got a great margin on their business, so you can't beat that high revenue and high margin, right? That's what.
Well, don't they have a monopoly on their business?
Yeah, they very much do.
Yeah.
And like I say, it's a lot of it has to do with letting governments get data to work with on the citizens, and there's many governments out there, and they all
Yeah.
want to know what their citizens are up to. So yeah, it's a company that really found a hot spot, and the hot spot is just growing and growing and growing, kind of thing. The valuation they always say is crazy because of the fact that it's like 100 times, 120 times sales, where the dot-com boom was like 40 times sales. But I guess people just feel like they're just going to keep growing into it. So that's the thing. This Tom Lee talks about scarcity. There's only one Palantir, there's only one Tesla, there's only one, some of these companies. So that's what makes them get such a high valuation because it's not like you can buy many companies that are the same of these guys.
Hmm.
It's almost like he compared it to collector art, and then I kind of got the idea. Uh, if you just looked at a Picasso and said the wood and the paint only cost this much, you wouldn't pay much. But if you find out it's only one in the entire planet and everybody'd like it, then the price goes up, right? So, Eric, when you're looking at the option market, two things hit me during the drop last week. One is I have a 36 SMA that got hit around 6,200 on the SPX. and the VIX hit some resistance at 22 on another moving average I had. Did you see a little bit of a stretch point, 6,200 and 22 on the VIX?
Yeah, we look at, obviously the level of the VIX, but also whether, the trend is compressing or expanding, and, kind of looking at along other cross assets as well. So we're not just looking at, I guess you would say the technicals on a chart and so forth, but
Right.
we're looking across the landscape, so to speak. So, one thing we did look at, just, and again, this is really, really simplified, but if you look at a 60-minute chart, you can see the RSI was like at what, 18 or something, just August, was it August 1st, back there. I mean, that's really, really oversold on a short-term basis. And especially if you're below, like say the kind of the default Bollinger Band area too. So it doesn't mean it can't go lower. It just means oftentimes at least you get a pause or a consolidation at the very least. But of course, we saw this big rally today, kind of gaining back on just about everything we lost, close to it, I guess. Or I didn't even see where we ended up.
We're in the 6330s, but the all-time high is like 6450. So we're still, a little bit on. Yeah. And I guess the risk would be possibly as identify something that could be risk is that gap on the VIX between 19 and change and 20 and change. If in fact there would be some kind of a run to fill that gap, and with all the tariff and negotiations and the submarines going around, and there's probably enough news that if some of it turns sour, to get that gap filled. But right now, it doesn't look like it's going to get filled.
Oh yeah, I mean, you've always got headline risk, right? And it's one thing we do is we're always covered with our position. So we're not doing naked options.
Yeah.
So if that helps.
Are you trying to use sometimes some moving averages to create your parameters, or when you're trying to create parameters, are you using highs and lows, or what's some of the methodology you kind of rely on?
Well, it really depends on the strategy. A lot of what we do is collecting premium,
right.
Selling out of the money options on the S&P, as well as other indexes, primarily the E-minis. So the Russell, we just did a trade on the Russell 2000 as well. That's interesting too, because that has been, that's kind of look at the CFTC commitment of traders data, and that's heavy short interest.
Oh yeah. IWM, I think, had 30% or better. But look at that support zone. I mean, is that going to hold? And if it does, I mean, is this still a bargain down here? Maybe, I don't know.
No, we hope so.
Yeah.
But and also if you look at the this is something we picked up from some of the research that we subscribe to, and I would have never really picked up on it if I wasn't deeply involved with reading some of this stuff. But not the S&P, we're talking about the Russell here. Over 700 of the Russell 2000 companies so far reported aggregate EPS acceleration of 20% year over year. So that's a big number.
Oh yeah.
So I don't know. I think it's kind of ripe for a short covering rally is really the long and the short of it.
Yeah. I mean, I thought it was game over when it got above 200, and then when I got above 215, I thought it was on its way. But then I'm listening to Rick Reeder of BlackRock, and he was talking about where to invest, and he made small caps sound like it shouldn't even be on the menu, which I didn't really like. If I want to be bullish on it, I'd like to hear somebody like him say there could be value there. But he said outside of a couple of spots, he's not that interested. Doesn't mean it's not a good idea, but it would be nice to hear, somebody who controls
some
that
validation.
Kind of money. Yeah, some guy who controls that kind of trillions saying, you know what, there's value there.
Right.
But anyway, yeah, you can see for yourself there is value there. The question is it going to have enough gasoline to get through 230 and then go out back to the 245? And if it does, boy, these are really good prices down here.
Yeah, and a lot of this too relates to what else is going on with other trades you might have going. So it wouldn't be something I'd say everyone take all of their
Yeah, yeah,
all
yeah,
of their
yeah,
eggs and put it in that one
yeah.
basket. But
But
you can,
it might be worth a diversification.
yeah, yeah.
Yeah, yeah. Alaina, what other markets have you been keeping an eye on besides S&P? I know you sometimes look at gold and some other things. Anything else on your radar that you're trying to trade?
Yeah, so I do like the Nasdaq as well, just because the S&P's tech heavy, they kind of go hand in hand. I watch the Dow as well, and also the Russell. I love the indices.
So mostly on the stock indices.
Hmm.
Is the Dow and the S&P and the Qs, are they trading substantially differently, or it's just a percentage of how much they're moving differently?
I would say there's a lot more. I would say I don't know. I would say static. Like there's a lot more static. Like um, barring like any type of like headline or serious like catalyst, there's just a lot of chop, a lot of weak momentum. I've noticed that over the last like I don't know, probably the past year or so. Like we do have some nice pushes, but definitely not the volume that I was introduced to in the beginning, which is
Right.
cool. And that's why I actually took up futures as well because I love the price action and this you just don't have the risk that go with the option. So I do like the minis as well.
Yeah. And do you also sometimes deal in the micros if the person's account is not that large to try to control the leverage factor?
Absolutely, absolutely.
Yeah, because that seems to fill you just as well as anything else, doesn't it? Pretty much.
Yeah, and I think it's important for like traders to know that, even if you want to take advantage of this trend or whatever's happening, like there's multiple ways to get exposed to it and it doesn't always have to be like you guys were talking about earlier, like naked options. That's like super risky. So there's just multiple ways to get involved.
Yeah. And the different leverage levels is important based on your account size so that one trade doesn't dictate your whole week or year, you know?
Absolutely. And I always teach people to use like a set position size just so you don't run into that like deer in headlights vibe where you're kind of stuck because
Yeah.
you're not used to managing such a large amount.
Now, you wrote a book recently on all this stuff. Can you explain that real quick?
Yeah, I did. It's called Trade Brain. And basically it's just about like all the things that the processes that go on in our minds when we're dealing with money and especially in the markets and trading. Just because a lot of people have, a dopamine addiction and they don't really realize it. So, it's not very, I don't think the psychology part of trading is so exciting for a lot of traders, but it's probably the most important aspect. So I just wanted to put that out there for people to have as a resource.
Yeah, that whole concept of mind control and being at ease when you're making your decisions and all that kind of stuff makes a lot of sense, doesn't it?
Yeah, like the market literally doesn't have to like outsmart anyone. It just has to overstimulate you enough to like abandon your plan.
Yeah. And it's understandable because it's any game of chance, people can get pretty wound up playing it, that's for sure. And
Yeah.
then you see the ticks going this and that. So, that's why I'm sure you like to have some kind of a plan on entry and exit and kind of, play it by ear a little bit, but also have some basic disciplines rather than just winging it.
Yeah, less is more. I'd like to, trade, take profit. If I, take a loss, I like to keep them manageable. And I'm, like I said, I'm more of a scalper, so my trades, I'm not in there very long at all. And it can just be tempting to want to stay and overstay your welcome. It's very easy to do that.
Yeah. Well, I think the book would be pretty neat. So at the end of the broadcast here, you can explain to people how they can get it and take it from there.
Thanks.
Erik, when you're doing your option writing, obviously you're working to try to get a sweet spot on time decay. What's some of the parameters, and I'm sure they are changing and they're specific to whatever the situation calls, but is there any generalities you can talk about as far as, when you're doing credit spreads and the expiration date?
Yeah, no, that's a good question. Well, we kind of built our own algorithmic engine
Mhm.
with all the various inputs to kind of pump out those answers day by day for us. But generally speaking, the ingredients to all that are kind of the some of what would be commonly ascertained. We're looking at some of the Greeks. We're looking at time value like theta and the days till expiration. You're looking at proximity to the strikes, how deep out of the money these positions are. You're looking at value, what's the premium, what's your value at risk, this type of thing. And then it kind of, you're looking at some of these strategies that might be non-directional. So,
Mhm.
but those aren't always appropriate. If the volatility is too high, the VIX is too hot, you don't want to do that. So, but yeah, I think when you're when you're collecting premium like this, you're going to look at some of what we do, and you're going to find there's opportunities sometimes anywhere from, oh, like some of the trades we did just Friday, for example, were a week or less, and that's pretty short dated for us because a lot of other times you might find trades that have 60 days till expiration, but you plan to close those out maybe by 30 days after some theta decay has worked its magic, if all goes well. So, it really depends, on a lot of inputs as to what the result is and what that looks like on any given day. But hopefully that sort of answers the question.
Yeah. And, do you do mostly on the SPX stock index, or are you doing it mostly on the E-mini future?
E-minis.
Gotcha.
Yeah, that's our bread and butter. We trade anything, but our main focus is on the E-minis. So, and out of the E-minis, I'd say the ES is more popular, the most popular. And for part of the reason for that is the execution. Some of the strategies we have are 6 legs. And so to get those executed as one order at one price and not leg in, you need a really deep liquid market, especially if these options are out of the money by, they can be out of the money by, well, the deltas on them might be, less than, 8 or something, 7, 8, 9, pretty low. So they're deep out of the money. And, the E-minis have the volume and have the liquidity to make that happen. Some of the other markets, in fact, just about every other market, even if you wanted to trade, 99% of the individual stocks out there don't really have the options market to support that. Maybe the big mega caps and so forth would, but.
Now, when you're doing the spreads, obviously coming out of it is going in as an art, and so is a exit. Do you tend to like to see these go down to zero, or is there some kind of a point where you feel like the risk reward isn't worth trying to get the last drop out of him?
Yeah, the juice isn't worth the squeeze. Absolutely. We're always out before expiration. Always. So whether it's for a profit or a loss. So yeah, we're going to get triggers and we're going to be out before expiration. And it may be that we capture 60% of the premium, 70%, 80% of the premium, and then move on to the next trade.
Yeah, because I've been, and you have been doing this a long time, and you run into a lot of traders, and especially ones that are just starting out. They seem to think that holding it until the option goes to zero, even if it looks like it's a 80% probability that might happen, they don't get the idea that at some point you're not getting paid to take any risk. And so even if 1 out of 10 times you're going to get nailed on it, like anytime a spread gets well under $1, you're obviously in the region of getting out, because obviously you can't make, if it's at 30 cents, you can't make more than 30 cents, and your risk might be $5. And, yes, 90% of the time it might not happen, but if it happens once, it's going to really mess you up, right?
Well, you should record what you just said and play it to every new options trader, because I can't tell you over the years how many times you've had to have that conversation with people.
Yeah.
And I think what the other guest mentioned too about the sort of the emotional aspect of it. People feel like they really just, I really kicked the market's butt there by selling those options, and they went to zero and I kept the whole thing, and they feel really victorious. But I can 100% guarantee you that will not work in over a period of time, much sooner than you realize. It will blow up against you. So you're gonna stay into a position where you could have covered it and captured, 95% of what was possible, and it's gonna blow up on you, and you're gonna end up covering that position for a massive loss at some point. And
yeah, especially short-term stuff, because the problem with short-term stuff is if you get caught in a jam and your time's running out, you got to take that loss.
Yeah.
That's right.
And that dings your principal, and then Harry Houdini can't bring it back.
Right, right. So yeah, absolutely.
Yeah. But these are things that, people only who understand the concept of time and price and how, like I say, when that time is running out and you're into a low priced option, if for whatever reason it goes against you, you're not going to have the option except take that loss and then hopefully have enough money to roll to something else. But if you've taken such a big ding on it, it might really affect your ability to roll.
Yeah, and just one quick comment. Part of the problem with that too is what you just touched on, is it results in further bad behavior. So
Oh, yeah.
it'll perpetuate one terrible decision after another as you
Yeah.
scramble to try to recover. So yeah, avoid that.
Alaina, are you doing
And
anything with?
hey, Jim,
Yes.
Norman is with us now as well.
Norman's here.
Norman
Speaking of bad behavior,
Are we supposed to say never fear Norman's here?
that's it.
All right, Norman, we'll jump in the game here, man. We had the S&P go down big on Friday, up on Monday. Now, what does Norm say is going to happen?
Well, what I think is going to happen is a sideways action, but I do want to dovetail this important thing that Erik is talking about, and you've gone deeper into, because this is kind of a corollary of that axiom. Here's my thinking, and it's something that I've been talking about almost first recently, and that is when you set a loss, and I do mostly futures trading, as you know, but when you set a loss, Linda, you put your stop in, or in the case of buying a premium, you're willing to lose that premium or whatever, that you shouldn't marry that number. That you should, once you're in the trade, in fact, the longer the trade takes, the less the initial reason you got in is real. The further you get away from it. And so the idea is that when you put in a stop, you should, after a very short period of time, you should be looking to shore that stop up and not say to yourself, as so many new traders say, hey, I'm willing to take this loss, because you've been trained to, you got to be willing to take a loss at $250. And therefore, the market is not doing what I want, but it's really not crashing either. Maybe I'll stick with it and see what happens, because I have that. I'm not anywhere near the 250. That's the wrong attitude. The attitude should be, now let me take a look at the new environment and decide how I can shore that from 250 to 200 to 180 to 20 in a responsible way. And so, I'm really glad that Erik and then you really embellished on this point, because the more you can save on a trade that's not going to happen, the more chances you have. And in trading, it's all about setting yourself up for the next chance.
And not letting any idea, ruin you, because some of these things, when you're, don't have a limited risk to it, it can get out of hand on you.
We can talk about placing your stop in the copper market on Wednesday that went down 20% in 1 minute. In 1 minute.
Yeah.
Unbelievable. So you need to have what I call a desperation stop, and mental stops don't work. You've got to have a physical stop in there. So yeah, you make a great point too.
Now, Alaina, I was asking if you're doing anything with these options or option spreads or anything like that, and do you have a particular philosophy on how you like to trade them?
No, I don't trade spreads. I used to trade spreads. I don't trade them anymore. But like I said, I'm not in trades very long. Like my average time is like 7 minutes.
Yeah.
So I'm more so like to scalp, and then I just put my profits back onto my shares.
Do you ever do the 0 to expiration options at all?
It's rare. It's very rare, especially with the SPX, just because the theta is so insane. But that's also why I'm not there very long. But yeah, if I'm on like SPY or Q, something like that, I'll buy some time. Just the 0 days, it's like they're alluring, but like they're just, it's unnecessary risk. And I think I grew out of it because I definitely used to trade those.
I think it could be used as a good hedging technique from time to time.
Mhm.
But, when you are trying to figure out what a trade is that you're planning on being in for 7 minutes, and then you throw in trying to track the options that you laid out,
Yeah.
that might be too many balls in the air. You know what I mean?
Yeah, and like less is more. I don't like to be
Yeah.
super exposed in the market. I just let my
Yeah.
shares do that for me. So yeah, I don't like to be in the markets constantly.
Yeah. I think, yeah, and that's important with the options too. Erik does like to do the collecting premium strategies. I'm sure he does others as well, but he probably would be one to say, since I specialize in this one, this is where my focus is, and so I'm not, being distracted 9 different ways during the trading day. Is that pretty accurate, Erik?
Yeah, and I'd also qualify that by saying we're not doing this on, NVIDIA and
Right, right, right.
and we're not doing zero DTE.
Yeah,
So yeah,
yeah,
that's why we're in the indexes. I mean, a big move in an index would be, 3% in a day.
yeah.
A pretty big move. But that's just par for the course on any of your, well, I mean, heck, I mean, stocks, I mean,
Yeah.
individual stocks are moving like that just in an hour.
Well, I mean, to be honest, because I've done this for many decades, it is shocking to me that you could go to a September contract with 46 trading days to go, and you could sell a 4,800 put, which is even lower than the S&P ever hit in April, and you can get paid $265.
Yeah.
I mean, so there is money out in the boondocks, and as
On
long
the
as
on
you
the on
obviously.
the tails, right? On the tail is what they call it.
Yeah. Oh, is that what they
Yeah.
call it? Yeah.
Yeah.
Yeah. I mean, because for God's sake, I mean, if you understand that, as long as time would go by and you never hit the strike price, that option has to go to zero at expiration. So, up is a reasonable concept. Sideways is a reasonable concept. And unless Norm plans on selling out his whole portfolio, the likelihood of going to 4,800 is very low. What do you think about that, Norm?
I think you're a wise guy, is what I think about it.
Uh,
All right.
Anyway, Norm, why don't you throw up a chart and show us some of the things that you're kind of looking at, and also discuss, obviously, what you and Alaina focus on quite a bit, which is the mental state of trading.
Oh, great. Alaina, great.
Yeah, sure.
Actually, the name Alaina was popular because of being Trump's attorney. I was, I was hoping it wasn't you, but now I'm glad that you're not the attorney. Well, let me share the screen here. I think she's
She's
now
too kind to be an attorney.
in New Jersey. This is what I look at, but I've been on top of this platinum market, which I like to look at. I mean, look at this action. This is one of our we like to focus on the 8-bar exponential moving average, which you can see how it holds when you get some of these major moves, even on this reverse here. You see this formation with the hesitation and then the power move through the 8. Here it is again on the bottom. Here it is again. So this is the loaded gun, simple trading plan, loaded gun, basic trigger that we use. And then, of course, getting in is kind of easy. Getting out, of course, is where here's one that didn't work out. So you don't.
Norm, real quick, just to make it clear for people, at the lows down there, and the loaded gun concept, is it that you have a green bar next to a red one, and then a green taking out the two of them, and that's your trigger to buy in? Like, I guess it would be.
Well,
I can't read the bottom very well. But.
Yeah, the trigger. If you look here, any kind of what I call a spinner or a
Doji.
Or doji, and usually on one side it should be on one side of the 8 with the power move, an extension candle through the 8. The bigger this candle is, the more you can ask of the scalp. Most people are afraid of big candles. I enjoy them because they can give you the higher scalp. And I train prop traders. I insist that they consider using a scalp so that they stay away from the red line, because loss of open trade equity is counted against you. And so when you take scalps, you're taking it at a limit. That limit is a zero loss of open trade equity. But looking at this chart, this is even the 5-minute. You can see the kind of action that you have here. Let's look at the daily real fast, and I'll show you why I'm so interested in this market. I mean, look at this run. This is a 40% move here, actually 50% at this point, from a commodity that's really been undervalued for a long time. When gold hit $850 back in 1980, it was the second month of my career. And silver went from about $3 to $50 platinum went to 1100 premium to gold by about 30%. And now it's 1/3 the price before it started taking off. So whatever the reason, I'm into the fundamentals to some degree, but I don't let it influence my trading. But I mean, this is action here that can start to scare some people. But and this is the 8 and the 34, which are two. This is a Fibonacci number. I'm big on Fibonacci, but the retracements can sometimes confuse you. I like this 34 because it holds the universal value. This cross, if it extends, then maybe we will get a correction. But I think that you're already seeing a possible at least check of this high, and then even further movement depending on what's going on with the tariffs. But one thing I wanted to point out, when you see this kind of an accumulation, we used to take this accumulation. We used to actually take a compass and or is it the protractor? Compass, yeah, with the pin here and the pencil at the beginning of the accumulation, and then just roll it up, leave the pin there, and that gives you a pretty good estimate of where this could go. And so these are very big moves, and when big moves beget more big moves. And so I like to be in the action. I think if you take small positions in an active,
Do they have minis and micros on this?
No, they don't.
No.
Actually, none that
No.
no, but none of the. I mean, you're battling lack of volume enough with this contract. But each of the this is only a 50-ounce contract. It's half the size of a gold. So from that standpoint, the definition kind of gives you at least a half contract if you're comparing it with gold. But this is a market that I've got my eye on. And so when you do, and then you go to the 5 minute is what I like to trade. You've got something going on here that let's see if I can get it up here. This is the 5. This is the 5. Now we're getting that accumulation that I like to see. This next move, if it goes higher, I'm thinking may take this out from that measure that I talked about, depending when it starts to break. So the fact that we're trading under the 8, under the 34, I don't like to take long trades unless I see the shorter term moving average above the longer term. But this is a market that I've got my eyes peeled on, and if we take out this high right here, I think you can you can have your plan here to eliminate some of your positions, take your profit. So don't go for the top, please, everybody. Go for something that gives you a much higher probability as you're heading for the top. And then if it breaks, leave one position on. This is if you're taking this three contracts, leave one on and see what happens, because this market is capable of going another 30-40%. So like this market, it's not for everybody because of the spread. You've got about $1 spread in this, which is big in futures. So this is the market. This is the market I'm excited about. Besides the copper, which has been kind of crazy.
This was very interesting to me in the end of last year, beginning of this year, around January. No, excuse me, not January. I think it was about March or April, because the Chinese had this big article how they were buying into platinum because the jewelers couldn't get anybody to buy the gold jewelry because it's so expensive. But they said that the big buying binge was going to end in July. And I found it kind of interesting that the rally ended in July. So I wonder on a fundamental basis if the incremental buyer has left the room, who was the big jewelers over in China. But
I'll ask my rabbi, I suppose.
Yeah. Well, no, because I loaded up on SBSW and a couple of other platinum-oriented stocks, and I made a very large amount of money. But I did leave in July because, first of all, I had made a lot of money. And the second reason was, in my ear, I remembered the Chinese story that I got on Bloomberg about the jewelers loading up the wagon like madmen, but it was only supposed to have on the short run, lifespan into July. So
Well,
I
this
just
is
thought I'd
one.
mention that.
I mean, that's tremendous, and you deserve it. You
Because
work.
well, bottom line, that something made it go up besides your good looks. I mean, obviously somebody was buying like heck, right?
That's
So
that's
it would make sense that if everyone hasn't taken a position in platinum in how many years, it was going sideways from 21 to 24, and all of a sudden the Chinese are going in there loading up the wagons in an illiquid market like this. A squeeze like that is going to give you that, right?
Yeah, and you know, this is the copper market, just to show you real fast.
Oh
Well,
yeah.
somebody can, this actually, this market, this chart, and this is Ninja Trader. I don't know if it happens on your chart, but this market closed down here. I don't know why it looks like this. But this happened in 1 minute. This move, and you can see the loaded gun trigger right before it happened, even on a daily basis.
Wow.
Before it happens. And here it is again. This is another one that I like, when you get a squeeze, and this is an engulfing pattern. But in any event, maybe Eric or Alaina can comment on that. Have you guys ever seen a misstep like this from a platform where the red line should be down to here on the
The
close?
wick, yeah, I haven't ever seen them. Well, I've seen them like that, but I don't know if they're like just little quirks or what. But I have seen like, Fed candles and things, but that's gnarly because it definitely dropped. I was in Tesla when that happened.
Yeah, that's why bots are not ready. I don't think, if it takes what it's seeing here, it makes
But
it.
didn't it come with a story about 50% tariffs on copper or something like that?
Yeah, or lack of it. Yeah, one of
Mm-hmm.
Yeah,
both of those. Yeah, and this is
because it's really just a gap down, isn't it? And just a meltdown.
yeah. Well, it's a tariff story, and it's doing it to a lot of markets. But when you got something like copper, that what happened was, I think they thought all copper, but it binds out to be copper. And if you've ever been to London, they trade copper wire, the copper diodes or whatever. They're all different contracts for copper, and apparently it involved more than they had thought. In any event, look at the move up, and then the 1 day move down. So put your stops in, everybody. Don't be the jerk that has the.
I don't know if a stop would have helped you in that
I was
case.
going to say, I don't want to sound cynical, but you'd be filled at the lows for sure.
Yeah.
You'd be selling the lows in a market like copper for sure.
Yeah, there's slippage. Did I mention slippage?
Yeah.
Well, the other thing, Norm, I don't know if this happened to you, but back in the day, I used to have a stop loss in copper, and then I'd wonder why it didn't get filled. And they used to say, no, that trade, it traded there, yeah, but it was a cross trade. I go, what's a cross trade? Well, that's where two guys, made the deal off the exchange or something, and so it never really hit the
Yeah,
tape
right.
or
I
something.
heard that. I think it's a double cross trade.
Yeah, double cross. Well, what they tell you is they just tell you the trade's unable.
That's yeah. Oh, that's all I got. Yeah,
that's the phrase they use. Unable from the floor.
What happened to calling for time and sales? You used to just have to call and say, "Give me time and sales," but you don't do that anymore.
Nope, can't do that. But I remember trading copper with 60 cents, 90 cents.
I was selling Krugerrands at 192. Now Krugerrands don't exist either, hardly.
Well,
nobody knows Paul Kruger anymore. They think of Paul Kruger, the economist, or something like that.
Well,
Krugerman. Say Krugerman.
They said that if copper ever got over $1.50, they would never get over that because you could melt pennies. You should melt your pennies at that point. But look at it now.
In fact, after this seminar, I'm going to go get some pennies, melt them down.
Right.
I could use the money.
Yeah, not if Erik doesn't get there before you.
Yeah, we're going to front run you.
All right, let's swing this frivolity back over to Alaina. And Alaina, explain a little bit about how, when people reach you, how are you trying to help them? I'm not 100% certain. I know you have the book that helps people, but do you have webinars all the time, or exactly how do you help people?
Oh yeah, so we do I'm really big on, I think if you can learn to regulate your emotions, like the trading part of it is not as complicated, but we do have just foundation stuff like how to trade, like what the stock market is, all the way up to planning and tax things. Like we help people learn all that stuff. And so yeah, we have the website, we have the Slack community, and then on our socials. But yeah, we've got resources for whatever experience level you're at.
Yeah, I think that's great because I was just thinking your total addressable market's about 400 million people, huh?
Yeah, but it's just
I mean, most people don't know much about this stuff,
Yeah, a lot of people want to gamble, and it just breaks my heart, honestly.
Yeah. the people who don't know will be helped by you, and the people who know too much will be helped by you.
Yeah.
So that's a nice combination. So that's great. Erik, you are doing some great stuff with collecting cash flow, creating cash flow for people, and trying to do it in, obviously through your analysis, what you believe to be a high probability success situation. And as I was illustrating, you're not hurting for finding premium nowadays, and you don't have to go very close to the money to do it. So do you want to explain a little bit about how you try to help people generate cash flow, make some capital gains along the way?
Yeah, I mean, I think when you collect premium, people refer to it as
Whoops.
Erik,
Hello.
Erik, did you
Uh,
step on something?
Were you collecting premium?
He was collecting. He was busy collecting premium. All right, Henny Youngman's
a
up
seller.
next. No, okay, yeah, we're here. We're
Yeah.
here. Yeah.
Yeah, you could choose to be a seller of those options and collect the
Hmm.
premium that others are selling you, or others are paying you, I'm sorry. And so we've developed strategies and technology and a proprietary algorithm to pre-build these strategies that are otherwise very complicated for people to build and create themselves. Because really, you've got, no pun intended, you have so many options, and you could look at a particular market and what expiration do you choose, which strikes are you going to choose, what's your entry price, what's your exit price, how do you manage it? So we can automate all that. And the best thing to do would be for someone to, on our homepage at altavest.com, I see it up here on the right side there, you can just register for a demo account and get our trade alerts as well. And we're a brokerage firm, so you have an account with us, and this is the technology that you would use to do some of these types of transactions. And the trade alerts are really unique because you'll receive the alert on your phone, and you just touch the link, takes you right to the alert, and if you like the trade, you just touch accept. So that's it. So you don't have to log into another platform or try to copy an alert down and get it wrong. I've had people say, "Oh, I wish I had this. I just did a buy sell error on some
Oh,
other news alert
yeah.
newsletter service or something," which happens. It's like, boy, those are tough to recover from. But yeah, so and then once your orders are filled, then the automation will just track it and monitor it day by day for you, and it will, if you want it to, it will close you out automatically, whether you have a profit or a risk target hit, whichever is first. So that's kind of the gist of it in terms
Now,
of
is there
what we're doing.
one firm I'm trying to get the concept down? So you get a text on an idea, and then basically, if you think the idea is up your alley, you touch another button, and it effectuates the trade.
Yeah, we execute the order for you.
And can this be done anywhere, or do you have a specific clearing firm that you work with?
Well, the orders are we're the brokerage firm, so these are
Okay, so if I was at Thinkorswim, or if I was at Trade Station, or wherever I'm at,
it
I
wouldn't work.
can't do. You'd have to go with your clearing firm to
Right.
make all this technology work.
Yeah, the technology is stuff that we built for our
Gotcha.
for us, for our
Yeah.
clients. Just like just like TD Ameritrade built Thinkorswim for them, right? I think they did. Didn't they build that initially?
Well, I
I think
thought
it
the
was.
guy with the Derby, Tom Sosnoff, built that or something, and then
Well,
then he
maybe you're
sold
right.
it
And
to
then they
them.
sold it. Maybe they
Yeah.
sold it to them. Yeah.
Yeah,
But
that's he
anyway,
sold it to them. Yeah.
yeah. So anyway, so yeah, basically we're a brokerage
Yeah.
and that's our technology. So as a client of ours, that's something you'd be able to use. And people like the trade alerts a lot. I mean,
Oh, I would
you know,
imagine they would, because a lot of people have a very difficult time with their job, their wife, their kids,
yeah,
whatever they're doing, golfing, and then trying to track all this stuff. It is not an easy thing. And so to obviously do the research and then come up with a conclusion, and they having the ability to accept or reject it by simple, and then putting it on by hitting a button, that's got to be very helpful to a lot of people whose time is very limited.
yeah, absolutely. We get, airline pilots, from the
There you go.
cockpit, hey, I just responded to your alert.
I got nervous once when I had a client I talked to, and he was in the OR as an anesthesiologist, and I just was saying to myself, I hope he's watching that patient.
Absolutely.
That's amazing, that kind of stuff. Well, that's great. Alaina, do you do anything with the prop traders? Because I would think that maybe some of them might go to you and say, do you have some kind of mechanism? Because, the short-term trading is up the alley of the prop trader, isn't it?
Yeah, I have some, but I don't do it. I'm more so like I think of myself as like a trading therapist on almost. So it's like just teaching people about themselves and how to regulate that. Just like I deal with people in crypto, forex, all of that. But I don't personally do it.
I gotcha. So
Yeah.
you have people that are familiar with it. And some of the
Mhm.
techniques you do on technicals, you let them learn so they could transfer it over to markets that you might not be trading, but they want to.
Yeah, because I'm like, if as long as they have the tools to make good decisions, like I'm cool with it. They don't have to learn from me. They can learn from anyone. I just want people to know how to regulate so they can be successful at this.
Yeah, that sounds great. Well, Norm, as far as what you're doing regarding the two areas of the mental state and the discipline and creating a
Actually,
plan, that'd be great. Look at that guy
yeah,
sweating. Who's that?
throw up. This is my main site, the Discipline Trader, but throw up your theirmoneyyourprofit.com because that's the main site for prop trading. Who is that guy? Uh, and but as you see on the lower right, if you've got questions, if nobody mans it, just give me your name and email address, and I'll send you more information on what we do. Um, and so, but I want to take a second and give props to Alaina. I know, because I'm actually the mother company of the Discipline Trader is Subconscious Training Corporation. We were all about and still are to a large degree the mental and emotional. And I know how tough it is to get people to focus on that. So when I see somebody that takes it to heart like you do, I have to say to people, this area of mental, this is the area of resistance for people, but this is the key for most people. So,
Mhm.
this is something you should really be checking out, Alaina and me, and all of those that have a dovetail or an emphasis on the mental and emotional. And then when you learn how to control, then anybody becomes a good fit. But you won't get very far unless you can control yourself. This is why people go from trading plan to trading plan. We do something, Alaina, that you do. I'm sure you do the same kind of thing. I call them nuances. In other words, things that you can do in the trading plan to fit the individual, as opposed to having them be more. Say somebody lacks patience.
Mhm.
You can train somebody from a mental standpoint to be more patient, but the easier path is to reconstruct your trading plan a little bit so that you're not pushing what they're weak at. In other words, look at shorter time frames, look at, in other words, certain things. So I call them nuances to change. So I just want to applaud Alaina for fighting with me
Thanks,
on
Norman.
this endless battle to get
Yeah.
people to understand that this is the key. This is the key. The mental part. Anyway, I'm so glad to have met you, Alaina. I've heard a lot about you.
You too. We have to chat. We have to have a sidebar.
Okay, we will.
Yeah, yeah. The mind has to be settled if it's going to make good decisions, right, Norm?
Absolutely, and you're like you're the bedrock of that.
Well,
You
I know. Believe me, I'm as calm as it comes when it comes to this stuff because if I'm not calm, that's a good sign that I'm not making a good decision.
That's it. That's
When
it.
you're making a good decision, you're not, you don't need to be told you're making a good decision. If you feel it in your body, you feel it in your mind, everything just is correct. You know what I mean? If any of that stuff's not correct, your decision's probably not going to work out very good.
Yeah,
And
I
then, of
mean,
course, if you're like you were saying, or I think Erik was saying, if you're hopping from one idea and then into another one, and you get nailed on one, and then you're going to go to another one, you're probably going to get nailed like three times in a row. You know what I mean?
which leads you to the fact that if you have a losing day but you followed your plan perfectly, you had a good day. And if you
Yeah,
had a winning day but you didn't follow your plan, you're an idiot.
yeah,
So uh,
yeah,
that's a nice
yeah,
idiot, though. Somebody
yeah.
that can really become a very nice person in the end.
And like I say, everyone has a problem with this at some degree, and then there's like reminders. I'm sure even very experienced people can benefit from you guys with this area because sometimes getting back to the fundamentals and a clear mind. You know, I'm sure you might have even techniques if things get hairy for you mentally. I'm sure you guys talk to people about what the steps would be to calm yourself down and get clear, right?
Well,
Absolutely.
So
Alaina and I are taking a deep breath right now and trying to calm
We're meditating.
ourselves down.
that's not a bad first step, is it?
That is the first step.
That is not a bad first step. All right. Well, anything else anybody wants to add here? Because we had Palantir come out with great earnings. It was up about 14, $15 right away.
I missed this earlier in the show, but Jack mentioned that HIMS is moving a lot in the aftermarket as well.
Ouch.
So
Pity upside?
No.
down. Opposite
Oh, okay.
Palantir.
Yeah, I think
Down
anything to do
12%.
with anything that has to do with pharmaceuticals is not going to have a great time when they're making a war on pharmaceuticals. That might be your first tip, that those things might have a hard time when the government is saying, "We'd like you to cut all your prices." Oh, is that our margins going out the window? Yes, it is, sir. So yeah, that's not too surprising. These guys could have trouble because of the fact that the sector they're in is under a lot of pressure. But the other guys aren't a lot of pressure. They just seem to just keep coining money. So that's the software, the clouds, the software servicing, et cetera. They're the ones that seem to be making all the money.
Yeah, United Health is having a rough year.
Yeah. All right. Well, thanks a lot for being here, guys. As far as Option Professor is concerned, we're going to have a seminar tomorrow, Tuesday. We have one every Tuesday. Lunch and Learn with trading indicators. So if you guys are interested, just go to optionprofessor@gmail.com and let me know. Just send me an email and you'll be all set. What Erik does writing the options is an outstanding strategy if done properly. And Erik knows as much about it or more than most people you'll ever run into. What I've been doing is looking at the buy side of options, looking for low priced options. Pretty much, if you've been a seller your whole career, you say to yourself, when would you get in big trouble selling options? And it generally comes when the premiums have gotten so low you're not getting paid, and there's some kind of event or reasoning that volatility might be coming soon. And when you combine those two factors, the buy side with lower priced options can be quite attractive. And of course, they do have limited risk to them, so that's attractive as well too. But it's the direct opposite of writing them. But again, on the probability side, you have to be very careful because, again, you're fighting time and price on the buy side, and those two guys are pretty rough characters most of the time. So that's why you have to be careful. But webinar tomorrow, Tuesday, and just shoot an email, optionprofessor@gmail.com, and I can rig you up on that. Erik, thanks a lot for being here. It's always a pleasure to talk to a experienced, knowledgeable option person. And Alaina,
thanks for having me.
Yeah, you bet. And Alaina and Norm, you guys will be meeting for dinner later, I guess. Or?
Virtual dinner.
All right, good to be with both of you guys, Alaina and Norm. And we'll all get together again sometime soon. Thanks a lot for being here, guys, and thanks a lot for listening, everybody out there. And we'll see you soon.
Thanks,
I'm back to David now.
Thank you. Bye.
All right. Yeah, excellent discussion. So thank you, everyone. Just a quick reminder, be sure to subscribe to Timing Research on YouTube or Substack or your favorite podcast app. Also, you can just go to TimingResearch.com. This post will become the archive for today as soon as I can get it processed. Also, we had an excellent event. Was it the week before last? No. 30 favorite indicators. So if you missed any of those presentations, you can always find those or any of the past archives on the Timing Research site as well. And just a reminder, mark your calendar for later this month, our next Analyze Your Trade event, where I'll have up to 20 analysts with half-hour sessions and no presentations, no set agenda. We just look at the charts that you, the audience, request. So that'll be August 21st, Thursday, starting at 10 a.m. Eastern and going until 8 p.m. So mark your calendar for that. And then I just want to thank my guests again for today. Erik Gebhard of altavest.com, Alaina Nicole of investingbay.com, Norman Hallett of thedisciplinedtrader.com, and I was Norman, he's theirmoneyyourprofit.com, and the Option Professor of optionprofessor.com. Thanks, everyone.